Hi everyone, please check the pinned comment and let's go through my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bearish scenario where we're looking for a three-wave structure to the downside in a WXY where we're still working on a wave X, before then a bigger three-wave move towards the downside in a wave Y. Inside of this wave X, we're then looking for an expanding flat, which is a 3-3 and then a 5-wave move to the upside in a wave C, where the most common target for wave B is between the 1.236 and the 1.38, pulled from the low of W to the high of wave A. And as you can see, that has been very nicely respected indeed on the 4-hour time frame. If we then look towards the upside, the most common target area for wave C is this white box over here, sitting between 28.9k and 30.4k. And what is interesting is that inside this target box we have the point of control of this wave W over here at 29.2k, and we also have a triple top at 30k for maybe then a liquidity grab and a move towards the downside. And what I think makes this scenario extra interesting is the channel as well, because many people are looking at this channel, but then you're going to be breaking out of this channel towards the upside, maybe going above 30k, which for many would probably be very bullish, but then price is going to go to the downside. So it's like a fake out of this channel and then a WX and a bigger Y towards the downside. You also see fib times on the chart, and the fib times that I pulled over here are pulled from the high of W to the low of W, and then you double click over here to compare the time it took to develop wave W with the time it takes currently to develop this potential wave X. Now we already passed the 1-to-1 fib time, which means that this green wave X currently is longer in time compared to this wave W. That is no problem. The 1.618 is still very much a target for a wave X, and also wave C is an impulsive structure which usually takes less time to form compared to a wave A and compared to a wave B. Now the invalidation for this scenario is if price is going to move to the downside and reach these lows once again. In the more bullish scenario, we are potentially expecting upside, but maybe one more move to the downside wouldn't be a bad idea. And actually, between the medium time frame bullish and bearish scenario, there is one resistance area right here, which I will show you later, that basically decides for me what's going to happen. So in this particular scenario, we are then also looking again for a WXY, where wave X is already finished after this three-wave structure over here. And then inside of this wave Y, we are again looking for a three-wave move, where this is the first structure, second structure, and then the third structure. So this is one of the two scenarios, got to be clear here. This is then a WXY, which is a scenario on the low time frame I have over here as well. But that makes it a bit messy. So a WXY, but then this wave X is very short in time. It's a very, very short move in time compared to this wave W. So another scenario is that this is a W expanding flat X and then a Y to the downside. So this double top, if we're going to pass that resistance area that I'm talking about over here, and we're going to take this high, the next area of interest is going to be this double top. If we're going to take this double top, then in my opinion, the next area of interest is that point of control at 29.2 or the highs at 30k. So we got to take it level by level, right? That's also with Elliott Waves the same scenario. But in this particular scenario here, if this is a WX and we're looking for a wave Y to the downside, wave Y has to be a three-wave structure. Now this is then a first structure, so first structure, second structure, and then we have this move. Now this of course can be a three-wave move, and then wave Y in the more bullish scenario would already be finished. Now I think that is a low probability at the moment. I don't really like wave Y to be finished over here, also because this yellow target box, this area around 24k, is an area that many people were looking to buy. How often does everyone win? You know, like I think that the low of wave Y is not yet in personally, but hey, you never know, right? So what I'm actually looking for, or preferably in this scenario, is if this is a first structure, second structure against that resistance area, and then a third move to the downside for wave Y, or past this resistance area, move up and then down, or as mentioned, up and then down, right? So in all of these scenarios, I'm still looking for a downside, but it all depends on this resistance area over here. So let's go to the low time frame scenario. And also in these scenarios, right, it's like we were looking for upside at these lows anyway. So for anyone that traded long here, of course, we were looking for a move towards the upside here. We were at the yellow target box. We had support on the weekly naked point of control and the daily naked point of control. we started looking for long scenarios, and also in yesterday's video you'll probably notice that the medium time frame bullish and bearish scenario, in both of those I was looking for a bit more upside, and well, we got this push towards the upside. That doesn't mean we're going to new highs, right? So in this scenario, this is the W very short X and then Y scenario, right? So we have W, X, and then we have a wave Y to the downside. So in this scenario is invalidated the moment we're going to take the high of wave X over here at 26.4k, but this is still a potential three-wave structure. As you can see, the channel so far has been very nicely respected, taken from XX to W, and this can just be another like typical channel type of structure. So if we then do look at that resistance area that I've been talking about, which is so important, it is this one over here, the blue box sitting between 25.9k and 26k. And the reason it's so important is, well, we have a daily, a naked point of control, but also the current weekly point of control and the current monthly point of control. So this month, most of the volume has been traded at this level as well. So this is quite a big resistance area for price, also in confluence with the channel. So it is a very important resistance area. If price manages to push above this area, then I think this high will be taken. And then the next area of interest is going to be that double top for then potentially wave X moving to the right. So then we have a W, 3 wave X, Y, and then preferably in this wave X you want to see an A, B, C, which means this should then be an impulsive structure to the upside, right? So that is something that I think is very important. Remove the boxes here. So that's why the invalidation is at X. And also, if we are going to find resistance here and move to the downside, we can still reach the even more common target area for wave Y, which is the 1-to-1 and the 1.236, where the 1-to-1 is still in confluence with the target box that I have between 24,850 and 24.3k. And of course, we still then have also the channel low somewhere over here. And if we then go to the micro scenario, then yesterday we were potentially looking for still an impulsive structure to the downside, right? Where we were having like a 1, 2, 3, potential 4 and 5. However, price here started to push towards the upside, where we started to build some bullish divergences. I'll show that in a second as well, with some leading bearish divergences, which I'll show you as well, of course. And then price was pushing towards the upside. And I mentioned in the Discord group as well that this push towards the upside looks impulsive, right? Volume is increasing. It's actually quite a nice impulsive structure from an impulsive autonomy point of view, I suppose, where this move towards the upside, volume was increasing as well. And then you had the 0.5 for potential wave 4, right? Taken from the high over here to then one of these lows. So we take it on the wave 4. So we have the 0.5, which is a maximum target for a wave 4. You can see it was hit over here on the 30-minute. This was a wick, moved down and then pushed up. But I wasn't confident over here for a wave 4, which I clearly explained in the Discord group as well. And I was looking for higher prices personally, which eventually happened as we moved above this white box. And the white box is something we spoke about yesterday as well. It's the support resistance area, support over here, potential resistance. Well, it was very shortly for one 30-minute time frame candle for then a continuation. And now we're finding support at this area for then potentially continuation to the upside, where in the more bullish scenario, you'll see what my count is. But in the more bearish scenario over here, we then have that target box, right, at about 26k over here, 25.9, 26k. And then this is a W structure. Then we have an X or a Y, where wave X is then an expanding flat, A, B, C, or this is then a 5, 3, 5 wave move in an A, B, C structure. It doesn't really matter for the most common target area for this blue wave Y and eventually the white wave Y and C, which is currently here. And I pulled it from the high to from the high over here to, I don't know actually exactly which low I took, but one of these lows. Doesn't really matter as they're very close anyway. And then I put it on the blue target box over here. And then you can see the 1-to-1 has confluence with the daily at 24.4k. So if price is going to move up over here towards the blue target box and then move down, then this is an interesting area of interest, that daily level at 24.4k, a level we mentioned yesterday as well. Now in the bullish scenario, this is the low, right? So we want to see continuation towards the upside for those other scenarios I've explained on the higher time frame. So then we have a wave 1, 2, a 1, 2, 3, 4, 5, 4, 5, right? An impulsive structure potentially over here, ending then around this blue target box. So if the blue target box gives us a reaction, it doesn't mean we're going to go for new lows, right? It can also just be a wave A or wave 1, followed by a 3-wave move in a wave B or 2, and then continuation in a wave C or a wave 3. So we have to observe if we get a reaction over here for potentially short scenarios or whatever it is. Of course, you need your plan, your strategy, you know, whatever your plan is, and you need entry requirements, but this can be potential short area. But then depending on how the move is forming towards the downside, is it going to be impulsive? Is it going to be more like a 3-wave structure? What's the volume doing? That's all things that I will make sure to keep you updated on, right? So we have to wait and see what price does, and then based on the move to the downside, we can have probabilities for either the more bearish scenario or the more bullish scenario. But in this scenario over here, what we're looking at is this wave Y and then a WXY finishing. So we have a 3-wave W, 3-wave X, and then this is a 3-wave Y to the downside, and then that has to be an ABC structure, which finished after the 0.5 Fib time, comparing W with Y. That's fine for a wave Y. This being an ABC though is not the cleanest, but it looks still more like a 5-wave structure potentially. 1, 2, 3, very short 4 though compared to this longer wave 2. So it more likely an ABC. But then in this move towards the upside, this wave 4 in white is not allowed to go below the 0.5 and especially this 25.2k level. So if I go to the 15-minute time frame, these fibs are pulled from the low of 2 to the high of this wave 3 at the moment, finding support on the 382, which is a common target for wave 4. You don't want to see price going down right now towards these lower areas. You first want to see it move towards the upside for then the potential wave 5. Of course, there's no problem if price is going to do this and then move up, because this area over here is still wave 4 material, right? You don't want to see it cross below the 0.5 towards these lows over here. So then we're looking for a 1, 2, 1, 2, 3, 4, 5 inside 3, then a 4 or potentially a 4 like this, and then a wave 5 to the upside for that blue target box up there. If we then go to the CVD, I can imagine it was confusing for some people over here at the lows. And I've been talking about CVD a lot actually in the silver membership as well, because it is so important. And I use it a lot myself as well. I love CVD. But over here, if we actually even go to the 5-minute at the low, so we had a swing failure pattern low. And I explained in the silver group as well that after a swing failure pattern, right, CVD tends to be a high, or there's a higher probability CVD is leading. Now, this is what happened. So over here, price moves to the upside. That's all good. You know, we have a bit of a structure. Price starts to come to the downside, creates bearish divergences doing so on the yellow line. So on the yellow line over here, price making lower highs, higher highs on the CVD. But then on the blue line, it is creating bullish divergences on the CVD. Lower high on the CVD, or a lower low on the CVD, higher low on price. That is a bullish CVD. And then the following happened, and I explained this in detail yesterday throughout the updates that I did. Price moves to the upside, and one can argue, yes, we have bearish divergences, right? Lower high on price still, but if we take the red candle yellow CVD over here, you can see if you look to the right, that the yellow line over here, for example, was still above the yellow line of the red candle, so a bit of like still bearish divergences, but price then moves towards the upside. And what do we see? What we see is price moving up in green candles, but CVD moving down. So there's more people selling in these candles than there are buying in the candles, but price is still moving up. It's still closing green. Very interesting. And that's the moment where I also said in the silver updates group, I'm like, well, you know, this might actually be a push towards the upside now, which gave also me the confidence actually. So because now we're seeing a bit of like very, very like one candle bullish CVD, you could almost say, right? With higher candles going to the upside, but CVD moving to the downside. So more people selling than buying. And that was very interesting. And that trend continued also here with this push to the upside. Again, CVD moving to the downside. And that's when it got very, very interesting. And that's after which we then saw that push to the upside. So this was 5-minute stuff on the CVD, but I think very, very relevant. And if we now look more locally over here, then we do have some bearish CVD divergences, lower high on price, but the yellow line clearly a higher high over here on the yellow line at the moment. So we have to wait and see, of course, how this is gonna pan out. Let's see, very local bullish divergence here already played out. We had a bit of bullish here, higher low in price, lower low on the yellow CVD, but it already played out as we took this high over here. So that's finished, and we don't have any. We have bullish divergences on blue, but 5 minutes here, you know, by the time this video is online, we'll wait and see. Now, I hope this video was helpful or valuable to you. Please check out the memberships and the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye-bye.